Everybody. Okay, this is an interesting morning. On Friday, we saw the market reverse a down move on no volume, which is fairly typical, the no volume move. They took the market up significantly going into the long weekend, and they gapped it up today on no real basis. But there are a couple of stories behind it. So one story is that Goldman Sachs raised up their all metals pricing. Another issue is the fact that China is strong, and China, people are now saying, number one, that the 20% decline that China had, that was overdone. Now China's going to bounce. Also, there's $7.4 billion, I was told today by someone, $7.4 billion on the sidelines in China going into new China index funds this month. And that's expected to take it up, as well as easing of some bank regulations and some other issues. So the global markets may be reacting to that. But it is the first day back for much of Wall Street in a while. Everyone who took their summer vacations, they're back today. So the markets are responding to a lot of this stuff with a strong sentiment. And we've got a cautious outlook. Reason is not that we think this market's going to explode through the moon for no reason. It's more because we're not sure which way they're looking to play this. Personally, I think that they're going to gap the market up. They're going to pull it in a few handles, probably about 4 or 5 handles. Then they're going to rip it up, break it higher, and then take it down below the levels we had before. We thought that probably has room to settle somewhere in the 1017 to 1019 area on the futures. So that's my personal opinion. The problem is the first move. Oil is very strong, so the idea of buying oil's low and taking that move up, that's fine. I don't disagree with it. I'll probably do a little of that. And then I'm going to look for periods of weakness. I hate to chase big up-moving markets. I'm much more inclined to try to short those markets and fade them. So, I'm going to look for stocks that aren't performing, as well as the group, or have downgrades or other issues. So I'm looking at the Moody's and the MHP because they're going to get beaten up a little on the court rulings in New York. I'm going to look a little at IBM, which has a downgrade on it, and it doesn't look as strong as the rest of the market, to see if I see points of weakness. And I'm going to look at which sectors are really not performing, and and then overall I'm going to wait and see when the market starts making lower highs. And when the market itself starts to make lower highs, that's probably going to be my entry point on the short side for the market-related items. Aside from that, got to be careful. It's a day, it's definitely a day that can be interesting. There's room to go to 9,600 if they want to squeeze you up. Eve even thinks there's room, if they want to take you to 96.33 and test the highs, it's a possibility as well. So, they definitely can play you. I personally think that the market doesn't know where it wants to be, which is one of the issues. And if it can figure it out, then we'll get some sort of direction. If the direction is on the downside and we start taking those other levels and we take the pivot, which is 10.11, then there's room on the downside. We can retrace everything that we did Friday also. I don't see it happening today, but if it does start breaking down, there is a lot of room. People shouldn't think they just have room on the upside. There's room on the downside. The market just hasn't made a decision right now, and they're squeezing it. Look at volume. Volume is going to be the key indicator. Strong volume today in either direction is going to help tip the balance to understand what's happening. Steve?